example, but this is essentially how to, pitch any kind of trade idea from bond, currency, or any other financial product idea regarding the markets. So starting off, I'm going to go through just an overview of what a stock pitch is, um, kind of break down, what goes into it, uh, what you need to make a good stock pitch, and kind of where you can go to start getting some ideas in formulating a stock pitch, and then kind of go over some presentation tips at the end on essentially how to deliver a good stock pitch. So after all these, I'll break it down, and then at the end we can have questions if you guys want to follow up on any of the things we discussed. So for all those at home following along, I, sent out, Larry should have sent a presentation out earlier. If not, I have updated or uploaded this handout section on the webinar. So if everyone's following along, currently we're just at the overview. So starting off, let's see. So what is a stock pitch? So a stock pitch is essentially just a presentation given to a buy-side client, or basically the sell-side analyst, breaking down a trade idea or market environment, and giving this detail to the client to help them with a recommendation. So sell-side banks have access to market participants, and they have research desks, and they're seeing the markets on the front line day to day, and they're kind of very involved in their product realm, and they are essentially coming with ideas to help their clients make money, right? So well, for the purpose of what we're discussing in this presentation, we are the goal of this presentation is to essentially help you guys understand how to deliver a good stock pitch that'll help you in the summer with getting an offer. So just like how you guys have your SEO pitch, and you have your essentially like elevator pitch or whatever they call it. The stock pitch is something that you kind of you should always have an interesting idea out there, and some points to that. If someone to ask you on the fly of something that you basically are paying attention to. So I just kind of put a brief kind of maybe minute or two high level, this is when you think of a stock pitch, you're pitching a stock on in front of traders on the desk. This is kind of what you want to say. You kind of want to start with an overview of a company, and as you can see, you have to say you've been following this company, give a ticker, tell what the industry is, maybe something about where they're based, what their what their market is, and kind of where the stock is, and what that is in relative to the market cap space. And then that's kind of just an introduction for the company, and it could be longer, but just kind of have a lot of substance in there, so you're kind of getting someone to get an idea of where you're going with this, just an introduction, right? And then after that, you're gonna maybe have 3 or 4 bullet points, giving market catalysts, maybe something with the fundamentals that people aren't paying attention to, something that is happening in the industry or specific to the company, or why they have a competitive advantage, so forth and so forth. So after that, you're also going to want to account for any risks associated with the company, like maybe they're trading at a certain level for a reason, and you want to account for that, and you kind of want to just basically not only have one side to the story, and kind of account for any significant risks out there to your thesis. And then after you've kind of put this together, you want to have a price, long or short recommendation with a price target and some kind of time horizon. So these are kind of the fundamental, like basic things when you think of a stock pitch, of what you kind of want to have in there to make a meaningful pitch. So well, when you're in your internship this summer, you can kind of see maybe who does this, and it's a this essentially you have capital markets, right? And it's a whole world in itself, and you have the sell side, which is the investment banks, the research. They're selling something, right? They're working on some idea or financial service or product that they can sell to clients with money, right? So you have the asset manager or insurance fund or portfolio manager or just the buy side, right? They are looking for ideas to better allocate their capital. And they use, they're looking at this because they have to pay out, they have liabilities, and they're looking to pay out their investors. So they have, money, and they need to use that money to invest to make more money. So essentially, the sell side is providing color or a trade idea to the buy side. Can everyone hear me okay? Let me see if okay, audio. Okay, so that's kind of where we are in who's pitching and who's kind of you know getting the recommendation. So when you're what essentially do people pitch when they pitch a stock? They can either pitch a recommendation, research might do a buy, sell, hold in the sector on the stock, on the company. Um, Banks write about newly created offerings, public offerings, if a firm is raising capital or issuing debt. There can be analyst recommendations on how these bonds will trade given the market environment and the company's strength to continue their business model, or how these bonds should fare in the market. And these are all kind of examples of different ideas that can be pitched. Um, so essentially, the client receives the trade idea, and the idea is that having received this idea and the client likes it, and they think it's well thought out and it's backed up by a lot of fundamental ideas, then the institution will trade on the idea, and this will generate activity for the sell side firm, and then they'll receive either commission or they will receive just some kind of credit because you're doing the trade with them versus another firm. So in equity space, whenever clients do trades in equity markets, and equity markets are a lot more automated and kind of transparent than some of the other maybe bond credit markets, but there's commission in the equity market. So every time you trade through the equity desk at maybe Goldman, they receive commission for that trade. So that's kind of the idea. You give them an idea, and the firm receives commission. So that's kind of like an overview of like stock pitch, like why certain groups do it, and maybe who's involved in pitching a stock. Now we're going to go over kind of the content that is in actual stock pitch. So when you're doing a stock pitch and you're preparing a presentation and you're looking, to pitch an idea, the first thing you should do is know your audience. You should know, who you're going to be presenting to. And in this case, examples of this are you pitching to a hedge fund? Are you pitching to a mutual fund, a pension fund? I mean, they all have different risk classes and risk profiles, and a hedge fund, might be able to invest in a riskier asset versus a mutual fund or an insurance company who maybe they can invest in something that isn't, highly rated. Maybe a hedge fund can, trade in and out of something, whereas a insurance company or a pension fund might be, buy and hold, or they have mandates over how much they're able to trade, or they can be long only. So you have to know like kind of what you're pitching and the criteria is for the client and what they can invest in. And also when you're pitching something, look at what the strategy of the firm can be, or maybe similar, what's similar, like what's worked in the past, or what kind of does this fund have a strategy? Are they a growth? They invest in growth stocks. Do they invest in dividend paying, stocks? Do they invest in blue chip stocks? Do they like things that are, do they invest in distressed companies? Basically, it's just looking at the strategy of the firm and trying to adjust your specific recommendation to what they kind of deal in. So if they're a firm that trade on maybe a merger, or look for a special situation in the markets to put on a trade, then kind of look at that. And so just make sure you understand the audience, and maybe kind of what the constraints are for giving a pitch. And a lot of times, this is just something more to think of, and I don't think it's going to be as applicable for your summer stock pitch, because they really don't give you, I mean, most times they don't give you, constraints on what the pitch has to be. But so when you kind of have that context into play, the next thing to do is to look at some things that you can incorporate in your pitch. So if you're comparing a specific industry, you have to kind of compare all the companies and value that firm based on what drives the stock, or what drives the company. So with a stock pitch, if you're looking at Facebook, you want to look at what how many clicks does something getting, or how is their advertising model being valued, or what trends do they have, and kind of what is driving their ad revenue. But that thing wouldn't necessarily be used to value an oil company, or something with more tangible assets. So just, like, make sure you understand what the fundamentals are, and what drives the company, and what the analysts are looking at, and what is kind of showing growth in the company. There are other ratios too that you can throw in there. What's like price to earnings, which is just price of the share divided by the earnings per share. That kind of is like a standard metric to compare a company with a high stock price, or with, it just standardized, because the companies have high stock prices, low stock prices, and I'm pretty sure you guys know this, but it's just one of those things that you can throw in there, so people can have a better comparative analysis of the company. So all these things: historical valuation, earnings, what's in the pipeline, like what is new to market that's going to be in development for this company. Basically with fundamentals, it's what's priced in versus what's not priced in. So hopefully, let's see. Okay, so the other side of that is, instead of fundamental analysis, you also have technical analysis, or charting. So there are different patterns you can observe with the stock graph, and essentially analysts look for resistance levels, or support, or certain trends that indicate the stock is going to be a sell or a buy. So I think in this chart, it's showing a head and shoulders pattern, and you can see that kind of is what someone would use to pitch, to say, well, I see this developing, and I think that's indicating that this is the trend for a lower price per share. So this is essentially just analyzing price, volume, and how the stock is trading in the secondary market. So that's something else that you can incorporate in your stock pitch. I personally am not the biggest believer of this, because I think it's just not necessarily it's harder to look at and kind of be consistent, and identify the patterns. I think I'd rather understand the business and the fundamentals, and what I'm investing in, than just kind of looking at charts and different patterns to make an investment decision. So what to watch out for. So when you're doing these pitches, always be aware of the catalyst in the company space. So things like stock splits, buybacks, what maybe bonds, or capital that the company has that are either due up, or just any kind of catalysts that are happening in the market with the company, any deals they're doing, um, any kind of ratio that catches your eye. You just want to look at that and keep that in consideration because it's there for a reason. If there's a heavy short interest in the stock, that means some people are, they are betting that the stock, might fall. So that's kind of something to keep an eye out for. So all these things are just some things to keep in consideration when you are looking at companies, and these things all affect the price of the stock and kind of the forecast of how the stock might do in the upcoming um, time frame. So so yeah, that was kind of just a overview of like what goes in a stock pitch. I think now we're kind of going to go over the resources and items that you can use to put together a stock pitch. So I think the best way to start looking at or getting an idea of what goes into a stock pitch is just look at a company research report. So in an investment firm, they have desks that are solely dedicated to following various industries, whether it be energy or tech or retail or all these various sectors of the market. They have just a sole analyst dedicated to analyzing and predicting these company earnings. So, for example, let's look at Apple. There's numerous analysts across the capital markets industry that follow Apple and try to predict Apple's earnings per share and kind of try to map out what is driving what were iPhone sales, what are MacBook sales, and kind of understand their pipeline and how they're going to do. And a lot of them are always like not even close. But so just for an example, looking what goes into that company valuation report and how they kind of are able to predict their recommendation and come up with a recommendation is very important to understand all the whole thought process that goes behind in coming up with that recommendation. So it's very in depth, and I think when you guys are if you're assigned a stock pitch for the summer from the firm, I mean, one of the best things you can do is go to the research group and kind of see like what ideas they have and what views they have on the market and kind of pick their brain and kind of I mean they a lot of times they're happy to help, and you can get access to the company research portal and look at all the ideas there and look at who's writing about this, and again, they're an expert on the specific industry or company, and they really have a good basis of just understanding of the sector and the company, and they can kind of advise on how to proceed. I mean, their job isn't to kind of help you with your stock pitch, but I mean, if you have an idea and you want to bounce ideas off of them, and you came with, well, I was reading this report and I found it interesting that this catalyst or this development was taking place, and then they'll share some of their ideas as to why and account for this, and so the thing I find interesting, and this is most likely the dynamic in many firms, is that the traders are kind of all mainly more focused on execution, and kind of they're very fast paced, and they're they have a lot of moving things and they're dealing with the market. But the research analyst is kind of somewhat removed from that, and they have the time to kind of explain things and kind of break all the jargon down and kind of help people interpret what their views are, because the trader is just there to pitch a trade and get something done, execute now, and the research analyst, research group, they have to make all these complicated ideas sound simple so that anyone can understand them, because it doesn't do their clients any good if they can, write a really complicated recommendation and someone has to decipher it, and it's kind of like, it's for them to kind of simplify the companies and the business they follow, and that's kind of just, I think, a good starting point of, reading a research report, understanding what goes into it, so you can kind of start thinking of, okay, well, this is like, the analysis, and this is the content that's in this report that I, can start thinking of, okay, this is how I construct this. This is what, the thought process is. So you have an idea and a basis of, what you need to do or how in depth you need to go, and so on. So I think you might be assigned a stock pitch or SEO, but do all this for the firm's stock pitch, not SEO. Like SEO stuff, you kind of just have to like do on your own time, not necessarily use your like your desk time to work with an analyst to help you with that. I mean, it's possible you can, but they recommend that you use the you use your time in the firm for the firm's business. So when you're creating a trade idea, I mean, there is a lot of items out there. I think it's important to kind of know, like, what's good to cite. And I think in terms of facts and having support for your pitch and trade idea or trade idea, you can look at, what's the Federal Reserve website, the Fed.gov, the BLS is the Bureau of Labor Statistics. They have an amazing amount of information on there. I don't mean to sound like a data, geek or whatever, but it's like they have, so many different things they measure, I mean, unemployment, just, wages, various demographics and trends, and it's kind of interesting if you can kind of spend some time in doing research there. But that's kind of what the research analysts do. They look at the data from the BLS, and they're able to interpret that and apply it to how that will impact the companies or sectors they follow. And that's just, on the government side. There's also, it's important to follow economic indicators, what's going on with the unemployment data, the GDP, consumer sentiment, inflation, consumer price index. So that's kind of the macroeconomic backdrop, and that helps with further supporting a trend, or helping to understand why a company is doing better. Either their margins are better, or the backdrop supporting this company to do well. That's just for the macroeconomic backdrop. With a company, you always want to look at their business model, and relative to the competitors, how their margins are, how their ratios are, what's driving their stock. Why is this company going to do better than its peer group? And here are just some resources that can help. And I think these are some of the more fundamental ones to look at. I like Barron's. They have a lot of good stock. It's a publication by the Wall Street Journal, and it's specifically focused on equity markets and companies, and they have a lot of stock pitches there, and they kind of do a good job of explaining different investment ideas. There is also Bloomberg, which has the website, and has a lot of economic data, and a lot of people pay attention to the headlines there as well. As far as breaking down certain products and market items, Investopedia is a good resource as well. So is Seeking Alpha, which is a blog. It's more of a blog of people publish articles on there, and kind of write about different investment and trade ideas. So that's kind of just some websites you can look at to help start getting in the process and mindset of getting comfortable with all these different terms and companies and investment strategies. So once you start looking at all the facts, the key thing to distinguish is that the facts are the facts, right? People don't make money on the facts. They make money on taking a position and having an idea and an opinion, and someone's gonna be wrong, someone's gonna be right. So once you kind of are kind of grounded on the facts, you want to start forming some kind of opinion. Well, I think all this is true. Like, all this is true, and given that, I expect this to play out in the market. I think that the Federal Reserve, all the options markets and all the volatility implied of in last week it was 30% that the markets are pricing in a March 15th rate hike at the next Fed meeting, and currently it's at 52%. So, a week ago, I was under the impression that, this is way too low of a pricing for all the data that's coming out, and I think there's a higher probability, and that's kind of what's playing out now. So it's something like that. You're looking at a trend, you're having an opinion, and it has to be, somewhat supported, but, at the same time, it's I think with that opinion, that being said, it's not about being right or wrong. It's about how you are able to express it, how you're able to support it, and how you can, like, think it through. Like, given all this data and, you connecting these dots, well, I think, that's my support for, this idea. And that's kind of how these professionals operate. They don't operate on, oh, I want to long this because I think it's good. I go with my gut. I mean, some people do that, but a lot of times that's just people say that's gambling. So I think if you can, try to realize the purpose of formulating a trade idea or a stock pitch or investment idea is to support it and have well thought out ideas that people can understand, and you can convince someone, well, that sounds like a good idea, and you guys can have a discussion on it and kind of make a recommendation. So after you have the data and you form an opinion, now is to kind of make a recommendation on how you want to play that opinion. So for example, I mean, just recently we were on a call, and we were talking about the Russian ruble, and it's interesting how highly correlated Russia is to the price of oil. So given what's playing out in the market and how oil is poised to go higher, we came to the conclusion that if you were if you thought oil was going to go higher based on all these conditions and what's going on with the data, it could be a good idea to invest in the Russian ruble, because there might be lower downside in the Russian economy pegging the currency to a certain level, and you protect it from that in that sense, but you kind of are also you're getting all the benefit of the higher oil price, making the ruble stronger. So that's kind of that's kind of how to like look at all this stuff and kind of summarize it and put it into some kind of recommendation. So the market trade idea, you would go long, you would go short. The market should, and when you give these recommendations, you want to have a context. So you want to say, I want to go long the Russian ruble at a price of $58, and I think in the next 3 months it could rise to the mid 60s, and I am a seller if it goes below 55. But that means that you want to protect yourself. You don't want to just be so I'm long indefinitely Russia. I think nothing could ever go wrong over there. I think my idea is right 100% of the time, and there's no downside. So you want to kind of say, well, I think I believe given the data and what I think is going to play out in oil and how Russia is positioned and what their rhetoric has been, I would go long the Russian ruble at a price of 58 and with a price target of 65 in the next 3 to 6 months. And if that doesn't play out and we see the ruble go below 50, 55, 56, I think the trade is no longer something that I would want to be in. But that's kind of what you're doing when you're giving a trade idea. You want to have a position, you want to support it, and you want to have an entry and an exit point and some kind of time frame. So that's just kind of how to think about the trade idea in terms of what data to incorporate, what how to talk about your opinion, and how to kind of summarize it. So you are accounting for, certain market developments and conditions because the market's market, right? Everyone's going to have an opinion, and in order for a trade to be done, and this is a gist of just sales and trading, I think there's always a buyer and a seller, and everything is based on supply and demand. So it's like, like you can think of one thing, but someone has to take the other side of the trade in order to, get the trade done. So for every buyer, there's always a seller. So just to realize that there's no necessarily, one right consensus. I mean, obviously things are going to play out in the market, and certain assets are going to go a certain direction, but there's never, okay, I only think that, people, um, you know, things have always like there's always been exceptions. I know everyone out there was betting that there would never be a Brexit, and there was, and a lot of the market participants were betting that Trump would not win, and he did. So just always realize that, like you have to kind of hedge yourself in a sense of your idea and kind of account for downside risk, or if you're wrong, or have some kind of reason in not just being kind of super bullish or super one way on a trade. So it's just kind of tapering it or tempering your recommendation as well. So okay, so that's kind of just the resources in the uh, stock pitch and kind of how to construct it. Next up, we're going to go over some presentation tips. I think, the content, while it's important, and your recommendation, it's good to have something that you believe in and that you can deliver. But I think this is probably, some of the more important items for just doing a good stock pitch. The way I think about it, the stock pitch and many of these presentations, it's not necessarily, whether you're right or wrong. No one's gonna, take your idea in your presentation, hold you to it, and you're not gonna get you're not going to get your offer based on how well your stock pitch performed, and no one's going to have accountability there. It's all about giving a good presentation. What the purpose of this is to evaluate your soft skills, right? You're gonna go in there and they want to see, are you confident? Do you understand what you're talking about? Did you do your research? Are you, able to articulate and simplify complicated ideas? So I think, having solid presentation skills and being confident and being comfortable and demonstrating that thought through your ideas and that you can deliver, a presentation that client will look at and say, wow, that's some really good analysis, or you did a good job of explaining to me why this is a relationship here, and why you think that. And that's kind of what they're looking for. They're not looking for you to be right on any. I mean, because they have analysts who their sole job is to analyze and understand all these companies and industries, and they get it wrong all the time. So focus more on delivering substantial content, and not necessarily about being right or wrong. It's just that's kind of what they're looking for. They're looking for high like just good presentation skills. So keep that in mind when you're looking at preparing a stock pitch, and focus on the style and substance, and not necessarily just having something that is 100% right. So with any presentation, when you get in there, you want to have good energy, and you want to break. I guess this is kind of that they say have some kind of pre-scripted icebreaker, or something that you can kind of connect with the room with, so they kind of ease attention. Like, you're not just there as like a stock pitch robot. You're there to kind of be amiable with the audience, and kind of lighten the mood a little bit. And then when you're doing your stock pitch, you're going to tell them basically what your recommendation is and what you're going to do, and then kind of tell them the catalyst and the breakdown of why you think what you think, and then tell them again what your recommendation is at the end. So that's just kind of on this presentation, kind of the overview before of kind of how you should structure it. You're gonna have a recommendation, right? You're gonna say, well, I want to be long this company here at this price, and I think here's why. Well, after you go over all those, fundamentals, and you account for any risks, after that, you're going to go ahead and reiterate your recommendation. So it's just basic presentation 101. I think just something they've noticed is if you're a lady, just kind of, have a high pitched voice, I guess, or just like be comfortable and just kind of you're pitching something. Just they think it's better if you sound serious. I don't know, but this is something that um, people have noticed or SEO has noticed in previous classes that just in terms of sounding confident, you're pitching a stock. It's just so people can look at you and take what you're saying, and it's part of presentation skills. So when you're doing the presentation, have eye contact, limit the number of fillers like ums, ahs, pauses, and if you mess up something in there, just keep going on. Don't sit there and or harp on, oh, I made this sorry mistake. I gotta fix it now. No, it's just you keep going, and you just want to have a smooth presentation. So that's just some basic presentation tips. So they apply here as well. So I think for previous classes, these are some kind of best practices that we've noticed that have helped interns with developing good pitches. And interns who succeed, they use this stock pitch project to build relationships and go out there and network. And I think that's kind of what I was kind of trying to harp on earlier, was that this exercise is to you know utilize your networking, teamwork skills. Like you're going to be in touch with so many different professional market professionals, and it's for you to take the initiative and go out there and build relationships, ask the questions, um, you know follow up, touch base, let people know how you're doing your project, and kind of make them feel that you're learning. And it's not just something, it's not like a homework assignment. It's not something that you get and you just sit in your desk and come up with the best stock pitch in the world, and then and even if you do that and you do a great presentation, this is more to get yourself out there and understand how people think, and meet people, and this is kind of I think a better use of this. It's not necessarily, like I said before, to have just be right on something. It's more of how you're able to practice it, how you're able to formulate your ideas, what is going on in terms of your development of the idea, and all this is to see how you're able to meet people and follow up with them, and build something that kind of takes you out of your comfort zone, right? So when you're doing these pitches, know your material. If you kind of put it off and you don't do you don't do your homework and you're not prepared for it, it's going to show. So you want to be ready on and cover all your bases, and have some kind of um, understanding of what type of questions they can ask you. So when you're doing a stock pitch, you're going to be doing this to market professionals, and they know the questions to ask, and a lot of them, they're not trying to give you a hard time, but they just want to see how your confidence is, and what essentially how you're able to handle a tough question, or are you rattled, or do you understand like the question, and can you know give an informed response. So I think for when I did it, I was in a room, and there was maybe 8 or 10 business professionals, and we were pitching a stock, and there'd always, be a few tough questions, and I didn't know the answer to everything, but at the same time, I, gave an idea of what I thought, and I was able to, think it through. And at the end of the day, if I didn't know something, I would just be honest and say, well, I understood so and so, but I didn't account for that, and I will follow up and get back to you. That's kind of a way to proceed. If you just, kind of, you know, keep silent, or you ignore the question, or just act like, you have no clue, that's kind of, well, did you just not pitch a stock and you didn't account for this? So it's if you've ever done a case study, or if you've ever had to do, a case presentation, this is something that, like, that's kind of how I think of this and how it's somewhat structured. They, it's more about kind of, seeing how you're prepared and how you're able to handle objections. And your answer is just, again, it's more important about having the style and substance than it is about being right. So that's just, how to kind of use this as a, relationship building project, and using it to kind of, go out of your comfort zone. And again, it's not just like homework. It's not just something that you're supposed to, take and sit and then, use your whole day to analyze. It's something that's a collaborative project that's supposed to, help showcase your soft skills and what you've learned. And again, it's going to be delivered to the market professional. So they're looking for, pretty similar things across the board. And it's not just, does this guy, or does this person, have, a stock pitch that we're gonna, he has the right idea and we're gonna measure his idea throughout the summer. No, it's did you do a good job, explaining this investment thesis that you've had, and did you understand these concepts, and did you, meet people, and did they, were you able to go out there and put this thing together and come back with a good work product? So that's kind of, what these 2 points are trying to, kind of state. So yeah, let's just go over some of what we discussed earlier. So when you're forming a trade idea, this is an example of some facts or support that can go into it. So as you can see, this past week, and this is just anecdotal. This is not relevant. This is kind of like a data presentation slide. But this past week, unemployment moved from 7.9% to 7.7%, shrugging off Hurricane Sandy. New jobless claims fell 25K to 370K. Also, fiscal cliff has yet to be resolved due to a stalemate between Obama and Boehner over taxes or deductions in spending cuts. This week, the FOMC is meeting to discuss possible QE4, and policymakers will also need to address the debt ceiling before mid-February. So this is just kind of some macroeconomic, backdrop. This is just talking about fiscal policy and monetary policy and some data points, unemployment rate, jobless claims, you know, that's the facts. That's what's happening in the market climate. And then from there, you can see it, like an opinion is developed. At the next FOMC meeting, Operation Twist will be replaced with another round of Treasury repurchases up to an estimated $45 billion per month, expanding total monthly purchases to $85 billion. Fiscal cliff and the need to raise the debt ceiling is causing investors concern. So that's kind of the opinion based on the backdrop. And then this is the trade idea. So based on the facts and what I think is going on, or upcoming in the market, I would long gold or buy gold, currently trading at $1,700 per ounce into mid-2013, because the FOMC's additional balance sheet expansion has not yet been priced in, and the debt ceiling will at least need to be raised by 1.3 trillion, aka as in 2011. So there's a high correlation between the increase in the price of gold and the increase in the U.S. debt limit. So that's kind of, how you have to have that's the kind of substance that you would need to, support and form an opinion and then have a trade idea. So that's kind of the framework and um, what is going on in this trade idea of buying gold. So while it's easy to say I like gold, I think it's a good asset to own, and gold's always going to retain its value. It's a physical asset. This substance, the facts, the macroeconomic backdrop, and the opinion based on what's not being priced in the market help support this trade idea. And it also talks about the correlation between the price of gold and the increase in debt limits. So as the debt limits increased, the price of gold will go higher. So that's kind of, a fully thought out trade idea and formation of how it was come up with. So that being said, just to recap, we discussed, how to form a trade idea, what you can do in terms of getting resources, what the focus of the trade idea should be, and what kind of what's the point of the trade idea or the stock pitch presentation. So just in terms of just going over some best practices again, um, watch your fillers when you are delivering your presentation, practice the presentation, know the audience, incorporate a lot of fundamental data into your presentation, and have possible objections in mind of what they can ask you, or kind of account for questions you might be asked. So yeah, that's just some things to keep in mind. And as far as some markets you guys can start following, again, I think the best thing to do with these trade ideas and stock pitches is to follow something that you're genuinely, passionately interested in. It's a lot easier to deliver a solid presentation on something that you have genuine interest. So if you're interested in tech, or a company like Apple or Google or Facebook, or one of those tech names, follow that because you know it, you know what the developments are, you might use it. So I mean, it would be a lot harder to follow maybe like like German bonds or Japanese bonds if you have no interest, or it's just something kind of far to left field, and you think that's because it's a you heard someone have an idea about it or something like that. Just it's not a bad idea to follow something because it's simple and it's widely known, and you use it, you like it, and you know about it. So these are some asset classes that you can follow for a trade idea. I mean, all the different sectors of equities, different fixed income products and classes, currencies, commodities. So that's just something that you can use to, um, you know, start thinking about. Like start thinking about, well, I already follow this, so maybe I'll look at it more closely and start looking at maybe what is going into, moving this company or asset class, or what the macroeconomic backdrop is of a certain fixed income instrument, and why is it trading there, and where is it going to go. So that's just some of the different asset classes and um, sectors that are out there. So now I'm going to open it up for any questions. I know we kind of went on over a lot of different items, so you can feel free to ask me about I guess any of the parts of the presentation. And let's see. Okay, if you're able to raise your hand, I think that's the best way. We can go ahead and have you answer questions. So I see that Emmanuel, you're up. Hello.
Hello.
Hi.
Yeah, so I just had a question concerning how you come to a price target. So for previous stock pitches I've done in interviews or just in general, I usually kind of look at the analyst consensus and try to adjust that price target according to my own personal views. But how would you, is that a good route to take in terms of articulating a price target for a certain stock, or would you have a certain different method in terms of, let's say, someone like us to come to our own price target in terms of how we come to that price for stock?
Okay, good question. So, the question was, how do you come up with your own price target? Is it okay or acceptable to use maybe a consensus of the analyst and kind of go from there. So yeah, I think that's acceptable. I think the analysts, who make these price targets, they're looking at all facets of, the company's operating business cycle, and they're just kind of valuing and accounting for, everything in the company. So, they put a, you know, they put a price and value on all their sales, their forecasts, their projections. It's essentially breaking up all the liabilities and assets of the company and their revenue streams and kind of trying to figure out their margins and that's kind of they have different analysis for this, like discounted cash flows or some of the parts. But the thing is, their price targets are their price targets, and they're very they're there for a reason, and they're backed up with a lot of analysis. So I think yeah, it's fair to cite that, well, the analyst consensus is here, and I think it should be here because they're not pricing in so and so. I think that's kind of more grounded. It's fair to um, it's fair to cite that and use some context, you know, for your recommendation. I mean, you can look at what they're using to make their price target, and then if you have to adjust it to account for your idea and they're failing to consider this development in the current market, and adjust accordingly. I mean, there's obviously some kind of analysis and basis that they've used in formulating this target. So it's fair to look at that, and I would look at their report, have an opinion on it, and come up with your own kind of, well, this is how I think this is not properly being accounted for. And again, a lot of the price you see analysts are, you know, they get it wrong all the time. So it's not uncommon, for you to say, well, I think the analyst community is, just not understanding this and not taking into account that this is going to be the impact of so and so. So I think I'm going to go against what this is the consensus is, and I'll have a opinion here. So just make sure you incorporate it and you kind of cite it, and it's not just, well, I think everyone's wrong and this has to go higher, and you have to just back it up.
Okay, thank you.
Yep. So let's see. If you have a question, you could I guess hit the raise hand and I'll get to you. Okay, next we have Ramal. Is that right?
Yes. Hey, how are you?
Yes.
Thank you
Yeah.
once again for taking the time out of your day. It's really helpful information. So I want to thank you for your time. My my question is centered around, I guess, the process within finding a lot of these trade ideas or equities to pitch. From my own experience, a lot of things, materials that I use are, Bloomberg equity screenings based on different things that I've been noticing in the markets or trends, and I'll try to find a specific company that follows those specific criteria. I wanted to ask you if this is a suggested method that I could maybe be using, such as during an internship stock pitch experience, or if there's any other, I guess, processes I should maybe be considering as far as finding that ideal equity that fits my interest.
Okay, cool, definitely. So I think the question is, how do you screen and define a universe of potential companies that you would look to have an idea on? Is that right?
Right, 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 right.
Okay, so yeah, I mean, in general, that's there's a lot of ways you can go about this. There's no, wrong or right answer. I think, when you're looking at your criteria, I mean, you want to, I guess, be aware of all the industry-specific metrics. So when you're creating a universe, right, you have to, be aware of, why this company either sticks out or why, this company is the way it is, and is this, normal for that sector or industry. And I mean, there's a lot that goes into just picking a specific company. And I mean, you're going to have to do research and, look into it more in depth. But if you're just screening, that's an acceptable way. Just look at, well, I think the way to go about it though is having context and opinion, or not, somewhat of an understanding of the macroeconomic backdrop to pick like a certain sector, and then from there get more and more granular. So I think you have to look at like maybe what's been going on in the next what's been going on in the past 3 to 6 months, and what does that mean for and what catalysts are coming up you know that's going to affect either sector or a certain market in the next short to medium term. So for the summer, you have a lot of resources um, for how to kind of screen a stock, and yeah, Bloomberg is good, and again, there are different tools and components into kind of going around and finding a company to do a presentation on. But I think it's for the summer and having good information. It's better to pick a company that's more well established, and that has people covering it, and that has I think it just kind of takes some of the legwork out of trying to convince someone to invest in maybe a very esoteric product, or kind of trade idea, or market pitch that's kind of not widely followed. I just think it's a lot easier when people can relate to something, or they're aware of a certain company, and you're able to better back up the fundamentals, or um, deliver your message, right? So I think you have more of a battle. For example, if you're pitching maybe a penny biotech stock, because there's a reason why it's there, and a lot of people don't understand the FDA trials. And I mean, if you are really been following this company, and you can have solid fundamentals to back it up, and maybe studied microbiology, and you know people who are involved in this company, something like that. I mean, that's like, you see what I'm saying? It takes a lot more for you to kind of be able to explain something like that, than if you're following maybe a bigger company like Bayer, or GlaxoSmithKline, or one of the bigger names in the space. There's a lot more research, some more people following them, it's more widely known, and at the end of the day, like I said, the presentation and the purpose of the exercise is to display your soft skills, and trying to showcase how you're able to formulate your idea, and it's a lot easier to do that covering like a well-known company, and something that um, I just found to be the case. So, but yeah, but in terms of equity screening, you know, the numbers are the numbers. It's kind of how you support them, and you kind of how you are able to understand and read between all these items for what is going to be your pitch.
Perfect. Thank you very much. Appreciate it.
Okay. Um, Next question. Okay, well, I guess that concludes our how to pitch a stock presentation. If anyone has any follow-up questions, feel free to shoot me an email. I myself or Larry, will be able to help with any questions you might have. Um, I hope you guys found that this was informative, and when you're actually doing the stock pitch, this presentation hopefully will be a good reference for when the time comes. So thanks everybody, and yeah, have a good night.